everyone. A very good afternoon to all of you. As you all know, today we are hosting a Twitter Spaces discussion on the topic post budget discussion on corporate tax and impact of budget on Indian economy and financial market. So let me introduce our speaker, Mr. Kshitij Sheth. He is a second generation entrepreneur and he is an IT graduate and has an MBA degree from Mumbai Education Trust Institute. Sitish, who refers to himself as a financial doctor and believes every earning individual in India has a responsibility to become wealthy, and every individual life is unique. So the financial plan has to be customized for them as per their needs. So, according to him, it is the biggest responsibility of a financial advisor to support individual navigate their financial journey successfully. So now over to you, sir.
Hi, thank you. So I'll be talking about a couple of things. Two main topics. First is obviously how the budget is going to impact the individual life cycle or individual journey in terms of their taxation, and second would be how the financial markets would be positively or negatively impacted because of this. Right. So, firstly, what's not changed? That's the first thing that we need to know about. So, what's not changed is, the capital gain taxes on equity and equity related instruments, which was one of the major, you could say, discussion point in financial markets, that, the capital gain taxes could be the entire way they have been structured could be changed. So it has not changed. So that is a positive for the financial markets, especially the equity markets. And second is obviously the ATC benefit has not been changed. It has been kept at 1.5 lakhs a year. And there are no changes on the interest that an individual would be paying on the home loans that they would have taken, which is between 2 to 2.5 lakh rupees. So this is what has not changed, and fairly in a good way to not change that. But since a new tax regime has been introduced, which puts the onus on the individual basically to decide if they would like to go with the old regime where they take benefits of all the deductions which are available under ATC, ATD, ATCCD, or they don't do all that, and the tax filing gets simplified for them. They don't have to submit anything in terms of the documentation, etc. And what this does for them is that the onus is put on the individual to to either spend or use the additional savings for consumption, or use that money to invest or save. So now the onus is on us as individuals in terms of what we need to do. But from an overall perspective, what we realized, while doing the calculations, is that for any individual earning up to 50 lakh rupees, the old regime still makes more sense. But individuals earning more than 5 crores, the high net worth individuals, for them the new regime makes more sense. Next point being, the tax arbitrage that which was there, because of which a lot of pushy sales used to happen, especially in insurance. All of us would have come across the HDFC Suraksha plan, where guaranteed income was provided for if you pay premium for 5 years, for 30-year plans, etc., etc. And now the cap has been put to 5 lakh rupees a year. So it's a positive, because a lot of high net worth individuals were using this tax arbitrage, in a way that the government didn't want them to do that. And the MLDs, market linked debentures, which were taxed at flat 10%. Again, HNIs were using it for their benefits. MLDs are very complicated instruments. On paper, they are debt instruments, but they are market linked. So an individual can actually claim tax benefit at 10% flat. So that tax arbitrage has gone now. So those were some loopholes, which were required to be filled in, which has been done by the government. So all in all, if we look at it from a perspective, what the government is trying to do is that what the finance ministry is trying to do is that they are trying to make it simplified. Hello. Uh, okay, let me continue. Yeah, so they are making to trying to make it simplified in terms of how an individual, how much time they spend on filing their taxes. And they are trying what they are trying to do is that they are trying to make it very pragmatic and a non-event for financial markets, by not doing anything out of the ordinary, and plugging all the loopholes and gaps which are there. From an equity market perspective, now, if I have to speak, it's a very pragmatic budget again, because the entire focus and is on growth through capital expenditure, and at the same time being fiscally prudent. What this means is the fact that as a government, or what I'm doing is I'm going to spend whatever income that I'm earning on building roads, bridges, all the infrastructure spending that I'm going to do, and at the same time, I'm going to ensure that I don't overspend, but I'm not going to give those cash benefits, subsidies, transfers to individuals, which used to happen in the past. And what this results in, what the government is trying to do is that I'm not going to give you fish on your platter to make it at your home. I'm going to teach you fishing. Now you decide how many fishes you want to catch, how many fishes you want to eat for dinner. So that's a positive move, all in all, by the government. And another point which I wanted to discuss is the 20% TDS, which has been introduced on outward remittances. So in the last few years, again, we have seen a lot of high net worth individuals, uh, you know, uh, uh, shifting their citizenship from India to some other country, and so the government doesn't want those remittances to happen in a big way. So that's why this 20% TDS which has been introduced. So again, from a short term, a lot of individuals may feel that this is a pain point, but it's a TDS at the end of the day. So you can always file your returns and claim it back. So that's something that in long run it will be beneficial for all of us. That's what I personally believe. As far as the economy is concerned, the real GDP growth rate, which has been mentioned in the budget, is at 6.9% for financial year 2023. So this effectively means that the economy is very resilient and it is not affected by the slowdown across the world. Okay, so that's a big positive. And the next point which comes is, from a growth standpoint, the government is going to spend a lot on infrastructure. Tourism is a big plus. 50 locations are going to be identified. So overall, it's focus on this capital outlay and consumption, and also for the fact that they are also looking at high spending in agriculture sector, and infrastructure development sector, and social sector, by the way. So these are all very positive points from a long term standpoint. And yeah, so that's about it, in terms of my 2 cents on the budget. And yeah, Darshak, if you want, you can uh, take over from here.
Sure, Sitish. Sitish, thank you very much, because it's good that you started this, because always wealth comes before tax. And
Absolutely.
therefore, it is very important that we first speak about wealth and then we talk about tax. So, hello guys, I am Darshak, basically representing the corporate tax discipline of SNCO. And today what we are going to discuss is about the budget, and I'm going to talk about the taxation aspects of that. So some of the important things, as I'm seeing, the crowd is a mixed crowd where there are chartered accountants and there seems to be some students also. So what I'm going to do is I'm going to be very lucid and very easy going in the form to understand the new things which have come up. First, I'll start with individual taxations. So, under the individual taxations, now what has happened is the leave encashments. I'll start from there. So, the for the salaried people, whoever have been there, the leave encashments now on the retirement, where earlier the limit was up to 3 lakh rupees. Now they have extended that and they have increased it to 25 lakh rupees. So, the exemption which is now going to be available is extended from 3 lakhs to 25 lakhs. So that's number one. Second thing, very interestingly, what they have been coming out is they are coming out with a, so of course there is a DG locker which everybody are aware of, where all the documents and everything gets saved. Now they are going to link it with PAN. Now the one may say, okay, what is big deal in that? They are going to link it with PAN. But now what is important to understand here is that because of the linking it with PAN, all our informations, our database will get auto link. Number one. Number two is that there will be a KYC. So every KYCs which currently we are doing it physically will of course happen now through this digital locker. And the third thing, the implication of that is tomorrow if anything you get updated, so anything which you update, automatically the updation of that will be happening to all the informations which you have stored on the DG locker. So as a result of that, what happens is everything which is going to get connected through an AI app, AI automation. So anything and anything which you change it in any of the documentations, then your KYC will automatically happen because of the PAN linking. And the second thing is going to happen is every informations will automatically get updated, and the income tax department will have the updated information. That is number two. The third thing which I would just like to share about is uh, the highest tax bracket, so which is above 5 crore, where the surcharge earlier was there, which has got reduced, and therefore now the effective tax rate is going to be 39%, which otherwise it was 42.75%. uh, some important other elements are conversion of gold. So what was happening is when we used to convert gold to an electronic gold scheme, or when we were supposed to transfer from electronic gold scheme to a normal gold, what was happening is there was an implication of capital gain. Now they have removed that particular implication, and they have made it free, that when you shift your gold, physical gold, to electronic, or you shift your electronic gold to physical, either of the situations there will not be any capital gain. That's what they have clarified. Now of course we have heard, and there has been a lot of things going out around the point that okay, 7 lakh rupees is now the basic exemption. Now that's true to an extent, because as long as your income is to the extent of 7 lakh rupees, you should be going for a new regime, and you should take the benefit of that. So the key pointer, key takeaway is that if your income which is important to note down, if your income is to the extent of 7 lakh of rupees, in that particular case you can go for a new regime, and there won't be any additional tax to be paid to the extent of 7 lakh. However, uh, if your income is above 7 lakh of rupees, then what you are supposed to just see is that the deductions, like your housing loan interest deductions, etc., if that is increasing, or that amount is over and above 3.75 lakh rupees. I'm repeating the amount. If it is above 3.75 lakh of rupees, then in that particular case you should continue to have the older scheme, because that is going to be more beneficial from the tax perspective. So summarizely, if you see that if your deductions are above 3.75 lakh of rupees, and if your income is above 7 lakh, then you should be going for the older scheme, and you should opt for the older one rather than going for the newer one. Moving to the next point, uh, under the ULIP plan. So these are all I'm talking about is in the phase of individual taxation, and then we'll go to business taxation also. On the individual taxation, the next point which is there is under the ULIP plan. So what was happening is if your premium was about 2.5 lakh of rupees, in that case, when you redeem the money from that ULIP plan, that happens to be taxable, because your premium, one time premium, is about 2.5 lakh rupees. Now that limit has got extended, so that's a relief which is given, and now relief has been, the amount has got extended from 2.5 lakh to 5 lakh rupees. So now until 5 lakh of premium when you pay one time, that is allowed, and the exemption which you get while you withdraw the money will continue to have. That's the benefit. Moving forward, another important thing which is to be noted for individuals who are having housing loans, that's this is important for them, because interest which we pay on the housing loan, we all are aware of that we are able to take the deduction, we are able to set off against our rental income. However, if I am staying in the property in which I have a loan, there what happens is you can claim interest expenses only to the extent of 2 lakh rupees. Balance you have to carry forward. That's what we all are aware of. Now that's a loss ideally. So what they have said is that if the amount is not claimed in your house property exemption, so 2 lakhs rupees over and above that, whatever is the amount, that amount you can claim it against your property. So you can include it as a value of your property, and you can adjust it against your capital gain taxation whenever you sell the property. So ideally now what will happen is 2 lakh rupee, if it is a self occupied property where you yourself are staying in that property, in that particular case 2 lakh rupees is what you will claim as an exemption under house property income, and balance amount you will carry it and consider it either as a part of your property, as a cost of your property, which you can include it as a cost and set off when you sell the property. And the second option is you carry it forward for the period of 8 years. So both option is available, which of course has to decided based on the cases. uh, Now, for the people who are doing foreign tours, there's amendment for them also, and there's something which is not favorable. But then I need to bring that to your notice that the tax, all the foreign tours which are going to be there, TCS will be collected to the extent of 20%. So earlier this tax was 5%, which now they have increased it to 20%. So all the foreign overseas tours packages which are going to be there, on that the tax is now going to be collected at the rate of 20%, which otherwise was 5%. I think I am done as far as the individual taxations are concerned. Some of the important things which I thought was going to be important for us, that's what I have brought it over here. I'm now moving on to business taxation. So from business taxation, I'll speak something which is in relation to MSME. So MSME payment. So any company which is registered for MSME, and if that particular company, as let's say I am A Limited, and I am supposed to make a payment to MSME against certain bills which they have raised on me. Now, while I am supposed to make a payment, if I don't make a payment within 45 days as per my agreed terms, and if I have not agreed anything, then 15 days is the time within which I have to make the payment. If I don't make a payment within this due date, in that particular case, this expenses will be deductible and will be allowed for me to claim it as an expenses only when I make a payment. So let's say year one, I have got the invoice from ABC Limited, ABC Private Limited, which is registered for MSME. Let's say the invoice value is 25 lakh of rupees. Now I have not made the payment within 45 days in year one. So I'll not be able to claim that as an expense. Now, when it goes to year two, and if I make a payment at that point of time, I will be able to claim that expense in year 2 and not year 1. So that's very important amendment which everybody who are into business has to keep in mind, that the payments which are going to MSME have to ensure that they have been made in the due dates. If not made within the due dates, then it will be allowed only on payment basis. So this is very very important announcement which one has to keep in mind. Now I'm going to the next one, which is for startups, and for the people who are into startups or dealing into startup clients, etc. Two things which have come up for them. One is the carry forward limit. So earlier you were allowed to carry forward the losses for the period of 7 years. Now they have been graceful to us, and they have extended this particular limit from 7 years to 10 years. So that is, and they have not been very graceful, but they have been to some extent. So they have extended from 7 years to 10 years. So you are allowed to carry forward the losses to 10 years instead of 7 years. That's number one. Number two is basically, in case if you even now intend to start a startup, right? And if you want to do that, then I think that planning etc should happen in a year's time, because now if you register, incorporate your company before March 2024, okay, 31st March 2024, if you incorporate your company and commence your business, in that particular case, any 3 years, okay, you will be getting the tax benefit. So you'll not be liable to pay any tax for 3 consecutive years out of 10. Now, therefore, I am saying that for anybody who is looking out for having a startup, to start a business in startup, or anybody who is thinking of doing it and have still not registered it company or incorporated and started it, one, I would suggest they should be taking a faster step and take it at least by March 2024. So they have one more year to think upon on that. That is as far as the startup is concerned. Now I'm moving on to the manufacturing plant. So we all are aware of that all the manufacturing companies, right, if they are opting for the new scheme which was announced last year and couple of years back, if they are going for that scheme, then the rate of tax is 15%. So what happened is, lot of cooperative societies who are doing manufacturing activities, we are aware of many of them, but one of the name which popularly comes to my mind is Lichard Papad, right? Now those are the women entrepreneurs who have all come together for and form a cooperative, and they are doing this particular manufacturing activity. Now for they were taxed at a higher rate, whereas the manufacturing companies were taxed at 15%. So now the government have to boost this manufacture, to boost the cooperative societies to do the manufacturing activity. They have also expanded and sorry, they have also extended the limit of 15% for them also. So they will also be liable for 15% taxation. Of course there are some conditions to be followed, but mind you, one important thing which needs to be kept in mind is that 15% tax is only from the income which is generated from that manufacturing activity. So anything beyond that, if it is generated, any income which is not directly related to manufacturing activity, then the rate is going to be 22% and not 15%. So that's one thing to be kept in mind. There was also a provision in the for the companies and also for cooperative society, that if you're dealing with your close people or close members, and if you're doing the transactions with them, then that has to be at the fair price, because if that is not going to be at the fair price, then the differential tax would be at 30%. So there are three tax rates. Number one, 15% if you are doing the transactions which are related to manufacturing activity, 22% if the income is beyond manufacturing activity, and 30% if you have tried to play any mischief and you have not done the transactions at the fair price. Then in that case you will be liable for a higher tax of 30%. Now when I say you, it is cooperative society who are doing manufacturing activity, right? Moving forward, earlier, when we form a company, any private limited companies etc, or when we set up a completely new unit etc, we used to spend lot of expense, lot of amount on the feasibility reports, on the project reports etc. This we were been doing as a before starting a project, and we used to claim that as an expense under section 35D. We all are aware about that. Earlier there was no reporting which was required to be done for that, but now they have brought a reporting to be done. So mind you, when you plan to form a company and you start incurring the expenses before that, and if you want and if you are claiming that in expenses. Earlier we used to claim it as at the time of audit we used to report it and we used to claim that as an expenses. But now you need to make a statement, so you need to file a statement with the income tax office, saying the particulars of expenses which you have incurred, and after doing that reporting to the income tax office you will be able to claim that under section 35D, not otherwise. So this is something important which one has to keep a note of. No, moving on to the next and very 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 important point which I would like everybody to pay attention to is on TDS. And we all are aware of, we were not able to get the refund on time. We used to have a lot of problems because my 26 years used to not reflect the right income, sorry, would not reflect the right TDS credit, etc., etc., etc. We all are aware about that, right? Now, and I'm sure people who are practicing, people who are doing regular compliances, etc., they used to have a lot of pain in doing the reconciliation work for the TDS, and then convincing to the income tax office saying that this is the TDS which pertains to year one, and income is already offered in year one, and blah 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 blah. We all are aware about that. Now, what they have done is they have brought some relief mechanism over here. Now, the relief mechanism is what I'll explain in a simple format is, let's say at year one I receive an income, and the opposite party who is the payer have deducted TDS in year 2, not in year 1. Now when the TDS is deducted in year 2, what is going to happen is he is going to reflect that particular TDS in year 2, in my 26 years. Therefore, now I am allowed to make a separate statement which will reflect the fact that these are the TDS which are reflected in year 2 in my 26 years, but the income of that is already offered in year 1, and therefore based on that you will be getting a credit of that. So this window of making a statement is for 2 years. In 2 years we will be able to make this particular statement and claim the credit of that. Now when this point came up, I got another question that what happened, because this what we are talking about is where in year 1 I am making expense provision, so I'm booking an expense, and in year 2 I'm my 26 years window is reflecting the TDS, right? That's what we spoke about. Now the second situation can be that in year 1, because of advance payment, I'm getting the TDS reflected in 26 as in year 1, but the income, because on a accrual basis I am offering it in year 2. This is also a practical scenario which everybody are aware of. Now what happens to TDS? There I believe there is already a window available wherein in year 1 when you have 26 years reflecting a TDS on advance payment, you carry it forward for to year 2, and in year 2 when you are offering the income, at that time you claim the credit of that option and window was already available, and therefore there is no change in that is going to continue. I hope I'm clear on this, but if you have any questions on this we can discuss it at the Q&A part on this particular point. Moving to the next one on the capital gain side, on the house property for the people who are having capital gains which are more than 10 crores. Be attentive on this, because if your capital gain is about 10 crores, and if you try to claim an exemption under section 54 or 54F, which is basically investment into residential property, in that particular case they have made a cap up of 10 crores, so you will be able to have an exemption to the extent of 10 crores. So that's the limit which now they have set up in the law. Moving on to the trust taxation. So people who are dealing in trust matters, people who are handling clients which are of trust, etc., for them there have been some things which is important for you to note. Number one is Form number 10 and form number 9A, which is basically a declaration that the expenses I am going to defer the incurrence of that expenses to the next year, or maybe in a following years. For that we need to file this declaration. Now this declaration has to be filed 2 months before filing the return. Now, why I'm bringing this to your notice? Because usually we used to have a practice that when we do an audit, and when we at the time of filing the return, we do the computation and we do the filing of it. File form 10 and form 9A. We do it at that point of time. Mind you, this is where we have to keep this point in mind, that it says 2 months before. So first we will have to file form 10, form 9A. Then let's say if you go on a chronological order, in the next month you will have to file your audit report, and next to next month, that is month 2, you can file your return. So that is the sequential change which they have brought, and we need to keep that in mind. Practically, in all probability, I believe what can be done is that we keep our due dates for trust audits 2 months before filing of the return, because then only you can finish off your computations also, and you can file your form 10 from 9A, and then later on if you want to file the audit, that can be done. But the for our internal calendars, we should always keep for trust now onwards 2 months prior to the return filing as our audit closure date. This is from the practical perspective. Moving forward, now I'm going to talk about the donations. Uh, so the donations which we used to do to Jawaharlal Nehru Trust, Indira Gandhi Trust, Rajiv Gandhi Trust. So this are the three of them which we used to do a donation. We used to claim deductions of that. Now that is something which they have removed. So they have said that those deductions and those donations which ATG was allowed earlier now will not be allowed on these three specific funds. Going forward, now I am done with the trust part. There have been some important things which I have brought to your notice. If there are some more things which you want to ask, of course you can ask me at later stage. I'm moving on to the corporate litigations. So how do we handle the litigation now onwards? So one thing to keep in mind is the refunds, which we used to get the refund while the processing used to happen. But now what they have done is, in some number of period, we are actually experiencing that wherever there is an assessment, they used to hold our refund, and they used to not pass on that particular refund on a basis that there is an assessment which is there, and therefore then they will give you the refund. Now the provisions are saying that point number one to note is that interest, sorry, so I'll start in a different chronology. First point is that whenever they hold the refund, okay, they will have to take a prior permission, and then only they will be able to hold the refund. That is number one. Number two, they will have to give you an opportunity of being heard. That is number two. And number three is basically saying about number three is saying about that interest. So the date when they have not given us the refund, so they have withhold our refund till the time our assessment gets completed. For that duration, they will also not provide us the interest for that. That's the number three. So these are the three things which are important as far as the refund is concerned. We used to face a problem that lot of matters which are pending before CIT appeals, and it's been a huge queue where we are still there lying or around to identify where our doors will get open, and we will be asked to give our submissions, etc. Now they have extended that, and they have said that there are some matters which are of the lower scale. They have not described the lower scale, they will come out with that, but those matters even the joint commissioner will be able to take it take the matters for hearing which are before appeals. Uh, One more thing which I would bring it to notice is that all the matters which are passed by the lower authorities below the ranking of joint commissioner, those are the matters which will be eligible for appealing before the joint commissioner, and the other matters will of course will go to the commissioner. Now they will come out with the guidelines of this to give a proper clarification on how this is going to function, but yes, that is what they have proposed in the budget. uh, this is now going to be important for the people who are doing transfer pricing. Till now, transfer pricing details which we have to file or upload, etc., we were getting a window of 30 days to file that. Now they have reduced that time limit, and the rationale which they have been saying is that because this information used to you are expected to have this information readily available, and therefore the 30 days time limit is not required, and therefore they have reduced the time limit to 10 days. So our reply and submissions have to be filed within the span of 10 days instead of 30 days which is allowed. On the part of corporate litigation, the next thing which I would like to just share is uh, in case of search cases, so if there are any matters which are in the course of search and seizure, etc., the office the authority is given power to refer on any subject matter to the experts, and they can take their opinion, not necessarily only in respect of valuation. It can be in reference to anything which is a subject matter where they don't have a technical knowledge about it. They can refer that matter to the experts and they can take their view. So that window and that authority is something which is brought into this particular proposal. The next thing is normal scrutinies, which are there under 143. Though the time limit of that has got extended from 9 months to 12 months. So, because I believe the reason could be that December used to a very very tough time for everybody as a professionals and also as a officers. So, therefore, they must have extended to March. So now 9 months has got extended to 12 months. Next thing which is there important, and this is very important for all the business people who are holding inventories, right? Please make this point as your note in your note. The point is for the inventory valuation. So till now, inventory valuations, the officers used to ask us the questions in relation to that, but they were not allowed to refer this particular thing for valuation to anybody else. Now they have opened that. So they have said that in case if the officer is of the view that he is not comfortable with the value which has been brought or at which the inventory is recorded, the closing stocks are recorded, in that particular case he has an option to refer this matter to the cost accountant and get the valuation done from them, right? Now of course there are certain conditions wherein you are supposed to take the permission of the CIT. Only after that you will be able to do it, not otherwise. But yes, this condition is there, and therefore it becomes very important for us to note that inventory is now also going the valuation of inventory is not only going to be questioned, but that is also going to be verified by the external third party expert consultants, in case if they find that okay there is a lot of things which are undervalued as far as the valuation of inventory is concerned. Now I'm moving to the next part, which is in respect of uh, some tax practices where they need to control it. Therefore they have brought some points over there. One is inventory, which I just spoke to you. Second is cooperative manufacturing cooperative society, where if they are not disclosing the trans or they are not doing the transaction at fair price, then they will be taxed at 30%. And third is penalty of 5,000 if there is misreporting of SFT transactions. So let's say if banks or for that matter even companies, when there are some specific transactions which they have been doing, and when they are supposed to do the reporting of that, if they do any error in reporting, and there is a misreporting, in that case there is a 5,000 rupees penalty which is going to be levied because of that reporting negligence. Now, the next point and the last point, as far as my submission for today is concerned, is TDS. Under that, the one thing which I'll just bring it is we are seeing lot of businesses related to gaming, gambling, etc. is what is going around. Now, what they have brought up is that all those gaming companies and gambling companies, when they are making uh, so generally what happens as a part of the mechanism, let's say for example if I am doing some playing some gaming on a games on some application and I earn some money out of that, it gets transferred to my wallet, right? Now when I withdraw from the wallet, that's the time where the gaming company is supposed to deduct TDS at 30% at the time of my withdrawal. Now, what happens in case if I don't withdraw? That is okay. You are not. They are not supposed to deduct TDS on a regular basis. But in that case, what they are supposed to do is at the end of the year, they have to do the calculation as what is the overall gain which the company has made, and on that there is going to be tax of 30%, right? So that's the provision which is there. The tax is going to be either when I withdraw it from the wallet, the TDS is going to be there, or if I don't withdraw the money, I keep the money in the in the wallet itself, then it is going to be there at the year end where the gain is going to be calculated and the tax is going to be deducted on that. So that's all about the TDS part on the gaming activity, and that is also all about the budget proposals which have come up. I have just given you the snapshots of each one of that. Now I believe I will have to open the platform for questions, and I and Sitij both are available for all the questions and would welcome for your questions. Thank you very much. Are there any questions the topic? Then people can please post your questions.
If anybody has any queries, then they might raise a request to join as a speaker.
Hi, I suppose there are two requests already. Hello.
Yes, Sitij.
Yeah, Abhishek, go ahead.
Yeah, good afternoon. Actually, I
Good
want to
afternoon.
add one point to the provision discussed on the house property deduction. That is 2 lakhs deduction, and there is an amendment that we can't claim the excess any interest on the while selling the property. So there are two options right now that either we can over and above we can carry it forward, or we can add it to the cost of improvement and claim it uh, at the time of selling the property.
Yes, Abhishek.
Yeah, so I think the second option will be the better one in this case, because if I go for the first option, that is carry forwarding the losses, so the I will keep on accumulating the same, and a time will come because normally in the housing loans the interest is huge, and people end up losing on the interest part. So at that, after suppose 8 years are over, then we can't just transfer this to the cost of improvement because that has already been claimed as a carry forward of loss.
You are absolutely right, Abhishek.
So I think this is just a clarification because people were thinking the tax avoidance tool. That's why they brought in this amendment.
So basically, the rationale which they have given is that earlier, uh, they have actually brought it in a different way, Abhishek.
Yeah,
What they have done is they have said that they have come across a cases where people have claimed both. They have
yeah,
also claimed interest under house property,
and the same
and
it.
they have also claimed as a cost. So they have
Yeah,
brought out in a curbing format where they said
right.
that if you are claiming it under house property, then
Yeah,
you will not be allowed to include it as a part of the cost. So therefore,
right.
I can interpret, or one can interpret, that therefore if I claim under house property, it is not a part of the cost, but if I don't claim as a part of house property, then it is a part of cost.
Yeah, but always I can the amount over and above 2 lakhs. I can always keep on adding to the cost of improvement, right?
That is what my view is. Yes.
Yeah. Yeah, and the other point is about the amendment in this section 43B. They have added one MSME, the payments made to MSME.
Yes.
Yeah, so if they are, the provisor to the section 43B is not applicable in that case. That if we pay to them before the due date or date of filing the return, then it is allowed. So will this not create an confusion among the associates that why this particular payment is treated in a different way and rest other payments are
So
treated in a different way?
basically, Abhishek, what they want to do is they want to safeguard the interest of MSME. So
Yeah,
I'm sure you are aware of the fact that earlier they tried to cover it by way of interest.
right.
I'm not sure how much I have are they successful in that, but therefore they have brought this particular provision so as the payment can happen and then you can claim that as an expenses. So that's the reason of bringing this particular provision to safeguard the interest of MSME.
Yeah, yeah, that is correct. That is correct. But this is allowed. They have allowed it on payment basis if they are the payment is paid within 15 days, which is as per the MSME Act, or within the maximum 45 days as per the agreement, if any agreement is there.
Yes.
Right. But like in 43B, for other payments, if we pay like on say 25th of July, then it is allowed because it is paid before the due date of the return.
Right. So
But
if
the
you are
same is
aware of, I appreciate where you're coming from, Abhishek. So if you are aware of the fact about your there is one of the provision which is ESIC,
right.
employees contribution per PF and ESIC, if that's the point which we
Yes,
consider.
yes, yes. Right, right,
Now
right,
that's the same model which they want to apply it over here.
right.
Right.
Perfectly right.
Right.
Yeah, yeah. Thank
Thank you,
you.
Abhishek. Thank you for raising the question. Is there anybody else who have questions?
I think Hiren and Smruti have. Hiren, go ahead, please.
Hello.
Yeah,
Yes.
Hiren, go ahead.
Yeah, my question is regarding that MSME payment 43B. If any payment, the bill was due, the MSME has given a bill on 28 March, and there was no agreement that the same will be due in 15 days, nearby in April, right? But if the payment is made, delay or not made till audit, then also the same has to be disallowed or the same will be allowed.
As of now, that is what the provision is saying. So
It is
now,
allowed or not allowed?
right now they have linked this provision with, as I was saying, PF and ESIC, where if you remember, when I that is I'm talking about employees contribution. So in employees contribution, if I miss the due date, I am not allowed that expenses, right? They have linked it with that right now.
I think they have not linked it. They have in 43 BF there is a proviso which allow payment, which allow deduction till audit. They have uh, uh, they have removed for this particular case from that proviso.
Hmm. Hmm.
But my question is this, that if the payment is not due on 31st March. If the
Hmm.
payment is not due on 31st March, then it will be allowed, or we have to see whether the payment has been made on due date or not afterwards. If the
Yeah,
bill
so
is
I
not
think
due,
yes. Hello.
I just want to add one thing in this. Hello.
Yes, please go
yes,
ahead.
Abhishek.
Yeah, actually, the question Hiren is asking is about like the bill is raised on 20th of March and the payment is not made within the due date. That is, if the due date is not met, there is no agreement, formal agreement. That date will be 15 days within due date. By default, due date will be within 15 days. And if the same is made on suppose 3rd of April, then it will be allowed in the same financial year itself because they are allowing it on accrual basis if the same is paid within the 15 days of statutory period.
Just give me a second, please. Just give me a
Yeah,
second. Abhishek,
yeah,
hello. So I'm right
hello,
now just going through the provisions again. So to reconfirm the point, right now at least they have not brought this particular point that if we make a payment, the benefit of deduction
yeah,
by making payment before the due date of filing of return
yeah,
of liability incurred during the year is still not available. So right now, when we read the provision, it is not having that.
yeah,
But yeah, so maybe they will bring it under the law once the law is actually getting presidential's approval. At that time,
yeah.
maybe if they want to intend to have that, then they will bring it up. But as of now, they have not reflected in that format.
Yeah. And one more thing, like you mentioned in ESIC part, that I have one my view is like if I'm not making the payment of ESIC employee contribution to ESIC part on the due date as per the ESIC Act, so it will not be allowed in any of the years, even if I make the payment later on, right?
So now the things have got changed. Earlier, that is what the provision was for
Yeah,
the employee's contribution. But now the
right.
things have got changed. Now you are allowed.
Okay, fine. Yes, thank you.
Is there anything else which is there? Any questions? Can I can I hand over this particular platform back to the organizers? Okay. I think we are done with the questions. The coordinator, can you please take it forward from here?
Thank you, sir. It was a indeed wonderful session. We hope that our listeners and followers had some very good away take away from this discussion.